Most traders don't lose money because their strategy is bad. They lose because they can't wait. They rush into trades. They force setups that aren't there. They feel uncomfortable doing nothing. So they do something. Anything. And when it doesn't work, they blame the market, the session, the news, the algorithm, their broker. They say trading requires faster reactions, sharper instincts, better timing. They say you need to be aggressive, active, always involved. Meanwhile, a small group of traders quietly does the opposite. They wait. They follow rules. They stay flat more than they trade. And somehow, with the same charts, the same markets, and the same hours in a day, they keep surviving while everyone else keeps resetting accounts. For most traders, patience feels impossible. It feels like weakness, like hesitation, like missed opportunity. Sitting on your hands feels irresponsible when the market is moving. Discipline feels discipline. Restrictive when price is flying. Doing nothing feels like falling behind. But for a small minority, patience makes trading almost boring. Structured, predictable in execution, even when outcomes vary. The difference isn't intelligence. Some of the smartest people in trading can't stay disciplined for a single week. It's not experience either. Years in the market don't teach patience if you never learn how to wait. It's also not about finding the perfect setup or the perfect entry. You can have a solid edge and still lose money if you can't follow it. You can know exactly what you're supposed to do and still sabotage yourself the moment boredom, fear, or impatience creeps in. Most traders don't struggle because they don't know enough. They struggle because they can't sit still long enough to let discipline do its job. In this video, we're going to break down why patience feels so unnatural in trading, why discipline collapses under pressure, and why the traders who last aren't faster, smarter, or more confident. They're just willing to wait when everyone else feels the urge to act. Part 2. Why discipline breaks down. Most traders think their problem is lack of knowledge. They assume that if they just learned a little more, watched a few more charts, found one better setup, discipline would come naturally. It doesn't. Some of the most undisciplined traders in the market are also the most educated. They know exactly what they're supposed to do. They just don't do it when it matters. It's not a capital issue either. Give an impatient trader a small account and they'll overtrade it. Give them a large account and they'll do the same thing with bigger numbers. The behavior doesn't change. The pressure just gets louder. And it's not opportunity. The market offers chances every single day. The problem isn't lack of trades. It's taking trades that shouldn't be taken, simply because waiting feels unbearable. Discipline doesn't collapse because traders are lazy. It collapses because being disciplined feels psychologically wrong. From the moment you start trading, everything inside you pushes toward action. Watching price move without being in a trade feels like missing out. Sitting flat feels like you're not participating. Your mind starts whispering that maybe this one is close enough. Maybe this time you don't need to wait for confirmation. Maybe discipline can be flexible just this once. And that's how it always starts. Think about a trader who's intelligent, motivated, and serious about the craft. He wakes up early. He plans his session. He marks levels. He tells himself he'll wait for his setup. The open comes. Price starts moving. He feels alert, focused, ready. 10 minutes go by. No clean entry. Another 10 minutes. Still nothing. The silence starts to get uncomfortable. His attention drifts. He zooms into a lower time frame. He sees something that looks almost right. Close enough. He clicks in. It's not reckless. It feels reasonable in the moment. 5 minutes later, he's stopped out. Now he's annoyed. Now he's involved. Now discipline is already gone. Contrast that with another trader watching the same market. Same levels. Same movement. But when nothing lines up, he does nothing. He doesn't feel clever for waiting. He doesn't feel patient. He just doesn't feel the need to act. If his setup doesn't appear, the day ends without a trade. There's no frustration because there was no internal argument to begin with. Waiting wasn't something he had to force. It was already part of who he was. This is the part most traders miss. Discipline isn't about willpower. Willpower runs out. Discipline is about identity. If you see yourself as someone who needs to be active, discipline will always feel like resistance. If you see yourself as someone who executes rules and waits by default, patience stops feeling like effort. Most traders unknowingly build an identity around activity. They feel like a trader only when they're in a position. Flat feels empty. Waiting feels unproductive. They equate stillness with failure. So even when they promise themselves they'll be disciplined, they're fighting against their own self-image. And you can't win that fight for long. This is why discipline breaks down under pressure. It's not the market that changes. It's the trader's internal state. As soon as boredom shows up, discipline starts to feel optional. As soon as a loss hits, patience feels pointless. As soon as price starts moving fast, rules feel slow. The trader isn't choosing to break discipline. They're escaping discomfort. And the market is very good at creating discomfort. It moves just enough to tempt you. It pauses just long enough to test you. It gives you partial signals that look promising, but aren't complete. If you need action to feel settled, the market will always find a way to pull you in early. The disciplined trader isn't immune to this. They feel the same boredom, the same temptation, the same urge to click. The difference is that they don't argue with it. They don't negotiate with themselves. There's no internal debate about whether to bend the rules. The rules are already decided. Waiting isn't a decision they make in the moment. It's the default state. This is why so many traders stay stuck at the same level for years. They keep refining strategies, changing indicators, switching markets, but the real problem never gets addressed. Their behavior stays reactive. Their patience depends on mood. Their discipline only exists when conditions feel comfortable, and trading is rarely comfortable. Until patience becomes automatic, discipline will always fail when it's needed most. Until waiting feels normal, every quiet moment will feel like a threat. And until that changes, no strategy, no matter how good, will save the trader from themselves. Part 3. The invisible forces that destroy patience. Knowing that patience and discipline matter doesn't make them easier to maintain. That's the trap. Most traders already agree with the idea. They've heard it 100 times. Wait for your setup. Follow your rules. Don't overtrade. And yet, in real time, when the market is open and price is moving, that knowledge disappears. Not because they forgot it, but because something stronger takes over. Patience feels difficult because it's fighting forces you don't see. Forces that have nothing to do with charts or strategies and everything to do with how the human brain is wired. Trading exposes those forces more brutally than almost any other activity. The first force is the need for action. Your brain associates movement with safety. In the real world, doing something feels better than doing nothing. Action gives the illusion of control. Waiting, on the other hand, feels like risk. It feels passive. It feels like you're allowing something to happen to you instead of managing it. In trading, this wiring works against you. The safest decision is often to stay out. But your brain doesn't register safety that way. It registers stillness as danger. So even when waiting is the correct move, it feels wrong at a gut level. The second force is dopamine. Every trade carries stimulation. There's anticipation, uncertainty, reward, or punishment. Waiting carries nothing. No feedback, no excitement, no emotional release. When you're flat, your brain gets bored. And boredom isn't neutral. It's uncomfortable. The brain would rather experience a small loss than prolonged nothingness. That's why traders enter marginal setups. Not because they believe in them, but because they want the discomfort to stop. The click becomes relief. Then, there's the illusion of control. Taking more trades feels like you're involved, like you're influencing outcomes. Sitting out feels like surrender. Discipline requires accepting that you don't control the market and never will. You only control whether you participate under your terms. For many traders, that acceptance feels like giving up power. So they trade more, not to make money, but to feel in charge again. Another force is outcome attachment. One good trade can make discipline feel easy. One bad trade can make it feel pointless. Traders don't lose patience slowly. They lose it suddenly, usually right after a loss or a missed move. The mind starts racing. You want to make it back. You want to be involved again. Waiting now feels like falling behind. Discipline collapses, not because the rules stopped making sense, but because the outcome shook your emotional balance. There's also time distortion. 5 minutes in a losing trade feels longer than 30 minutes of waiting. A quiet session feels endless. A fast move feels urgent. The market stretches and compresses your perception of time in ways that amplify impatience. You start believing you've been waiting forever, even when it's only been a short while. That exaggeration pushes you toward action, just to escape the feeling. These forces are always present. They don't disappear with experience. The difference between traders who struggle and traders who last is not that one group doesn't feel them. It's that one group stops trying to fight them. They stop expecting patience to feel comfortable. They stop waiting for discipline to feel natural. They accept that waiting will often feel dull, frustrating, even pointless in the moment. And they stop interpreting those feelings as signals. This is where most traders get stuck. They treat discomfort as information. If waiting feels bad, they assume something is wrong. If discipline feels hard, they assume they're missing an opportunity. But discomfort in trading is not a warning sign. It's the environment. The market is designed to pressure you into acting early, acting often, acting emotionally. If you're uncomfortable while waiting, that doesn't mean you're doing it wrong. It usually means you're doing it right. Once this clicks, something shifts. Patience stops being a personality trait and starts being a skill. Discipline stops being something you summon and starts being something you protect. You no longer ask whether you feel ready to trade. You ask whether conditions are ready. You no longer judge a session by how active you were. You judge it by how well you respected your boundaries. The traders who last don't build patience by forcing themselves to wait harder. They build it by removing the internal debate. There's no ongoing negotiation about whether to enter. The criteria are fixed. If they're met, they act. If they're not, they don't. Waiting isn't heroic. It's mechanical. And because it's mechanical, it doesn't drain them. This is the point where patience and discipline stop feeling like effort and start feeling like structure. You're no longer resisting the urge to trade. You're simply following a process that doesn't require you to feel anything in particular. The chaos quiets down. The market hasn't changed. You have. And once that happens, trading doesn't feel easier because you're winning more. It feels easier because you're no longer at war with yourself. Part 4. When patience becomes who you are. This is where everything changes. Not when you learn a new rule, but when discipline stops being something you try to apply and starts being something you default to. The traders who last aren't constantly reminding themselves to be patient. They've built their entire approach around removing situations where patience would need to be forced in the first place. The shift begins when discipline replaces desire. Most traders act based on how they feel in the moment. Excited, bored, frustrated, hopeful. Discipline doesn't care about any of that. It doesn't ask whether you feel ready. It asks whether the conditions are right. When rules come first and feelings come second, trading stops swinging your emotions around. You're no longer negotiating with yourself. You're simply executing a plan that was decided in advance when you were calm. Waiting then turns into a skill, not a test of character. Sitting flat isn't avoidance, it's intention. You're not missing trades. You're filtering them. The market can move all at once without you. That no longer creates pressure. You know your role. You wait until price comes to you, not the other way around. And when nothing lines up, doing nothing feels complete, not empty. As activity decreases, clarity increases. Fewer trades mean fewer emotional spikes. Fewer decisions mean less mental noise. You start seeing the market more clearly because you're not constantly involved in it. Selectivity sharpens your focus. Instead of trying to catch everything, you wait for the moments that actually matter. The irony is that by trading less, you become more consistent. You see this clearly in traders who once struggled with overtrading. They didn't change strategies. They didn't discover a secret setup. They simply limited when they were allowed to participate. They reduced their trades, slowed their pace, and accepted that most sessions would involve more watching than doing. The result wasn't excitement. It was stability. Their losses became smaller. Their winners became cleaner. Their mindset stopped swinging wildly from one trade to the next. This is where identity locks in. You stop seeing yourself as someone who needs to be in the market. You start seeing yourself as someone who executes rules when conditions align. Your confidence no longer comes from winning trades. It comes from knowing you didn't break discipline. A losing day doesn't shake you because you didn't fail at your role. A winning day doesn't inflate you because you know it wasn't luck or brilliance. It was patience doing what patience does over time. The truth most traders don't want to hear is that patience and discipline are quiet. There's no adrenaline in waiting, no thrill in sitting out, no story to tell about the days where nothing happened. And that's exactly why they work. The market doesn't reward excitement. It rewards restraint. It rewards those who can stay calm, while others feel the urge to act. When patience becomes routine, trading loses its drama. There's less stress, less urgency, fewer emotional decisions. You wait. You execute when it's right. You step aside when it's not. Over and over again. Not because you're special, but because you stopped trying to make trading feel good in the moment. That's the difference between traders who burn out and traders who stay in the game. One group needs action to feel alive. The other is comfortable letting time do the heavy lifting. If you can learn to wait when nothing is happening and stay disciplined when something finally does, you give yourself the one edge that doesn't fade. And if this way of thinking resonates, keep following the channel as we share more insights, trading stories, and trading motivation tips in future videos.